Hello everyone, morning, afternoon. We're just gonna we'll give it about a minute. We'll wait a minute just for some people to join, and then we'll get the session started. So bear with us. Okay, well, I can see we've already got plenty of people joining. I think whilst we wait for more, I think I'll just start with the intros. So welcome everyone to FNA's fourth Suptech Broadcast now. Very much like our CBDC broadcast, the audience for this is growing very nicely. I guess, like the topic of CBDC, Suptech is definitely one that continues to gather pace in the market, certainly in terms of being a strategic priority. So the topic that we've got today is absolutely spot on. Thank you, I guess, to everyone for joining and also for supporting these sessions so far. So I'm Anthony Harrison. I look after marketing here at FNA. We have, as always, two fantastic guests for you today. Before I hand you over to them, I'm just going to cover some quick housekeeping and then we'll get the discussion started. So next slide, please. So the Suptech broadcast follows a 60-minute format. Roughly 45 minutes of that will be spent talking to our guests, and then we'll have a 15-minute Q&A at the end. So if you'd like to ask a question, as many of our guests do, please don't use the chat functionality at the bottom of your screen. People's questions tend to get lost that way. Please do use the Q&A widget at the bottom. Small little widget next to the chat. It says Q&A. If you want to ask a question, please drop it into there, and then our guests will aim to answer as many of them as we can at the end of the session. So for those of you, perhaps it's your first session, perhaps you're not that familiar with FNA, I'll just explain very quickly what it is that we do. So we are an advanced analytics and simulation technology company. We work across four core sectors, those being central banks, commercial banks, FMIs, and national security organizations. So our software is solution-based per sector. So where a central bank might use our technology for RTGS stress testing purposes, a commercial bank will use the same underlying tech to optimize their liquidity in real time. So we're very active in the Suptech space. Next slide, please, sorry. Very active in the Suptech space, definitely lucky to call some of the most innovative central banks and financial authorities in the world as clients. This slide here just very briefly explains our core collaboration areas with both central banks and also financial authorities. So Suptech for us at FNA is split across three core solutions. Loan data analytics, the first one, which is a solution that we deployed earlier in the year across Project Ellipse with the BIS. RTGS stress testing, to me, a very hot topic right now, which allows, of course, central banks to understand both operational and financial stability implications of stresses to participants within their payment ecosystem. And then the last one there, payment behavior monitoring, a solution that provides central banks with real-time visibility and also alerts into liquidity or stability issues within its own payment network. So all very relevant stuff for today's session. I'm going to hand you over and get started with the discussion now. I'll pass you to Adam Chabai, who works here at FNA as Global Head of Central Bank Engagements. He'll introduce our speakers and then we can get the discussion kicked off. So Adam, thank you, and over to you.
Excellent. Thank you very much, Anthony, for this kind introduction. Ladies and gentlemen, good day to you all. It's a real pleasure to reconnect after a few weeks. As Anthony mentioned, today we are going to talk about a very important topic, and that is Suptech as a strategic institutional priority. And together with our expert speakers, we are going to talk about some of the critical factors that contribute to a successful Suptech strategy. And we are also going to highlight some examples of success stories that can provide some inspiration for those of you who are looking to adopt these Suptech solutions in real life. I'm really delighted that today we are joined by two seasoned practitioners who are extremely well positioned to share some very interesting and timely insights with us. Dr. Rafael Gomes, who is the Managing Director at Accenture, and Oliver Wünch, who is partner at Oliver Wyman. Rafael, Oliver, a good day to you both, gentlemen. Welcome and thank you for joining us at the Suptech Broadcast.
Thank you. Thank you for the invitation.
Excellent. Thank you very much. So, Rafael, to kick off our discussion, could you please share a bit information about your background and also about the current Suptech work that you are pursuing?
Yes, absolutely. Thank you very much, Adam, Anthony, and Anastasia, for the invitation to speak. Hello, Oliver, and hello, good morning, good afternoon, good evening to all the participants. A pleasure to be here. So you heard a little bit about my experience there. I'm currently based in the Middle East after about 10 years of Accenture in the UK, working there and with our clients across Europe. As far as our Suptech work that we're currently pursuing is concerned, so our most high-profile work, I suppose, that is in the public sphere has been with BaFin and with MAS on reporting frameworks, data strategy, Suptech tools. I find that Suptech work comes in many guises. So beyond what you might consider the end-to-end Suptech platform and operating model for the supervisors. I believe all data strategy work touches on Suptech or should do. We're working with a very large number of central banks on data strategy at the moment. And then more narrowly on some use cases related, for example, to stress testing, fraud supervision, economic forecasting, technology resiliency. Collecting data and collating it through Suptech sort of channels. And then finally, we also take part in consortium developing regulation as code, which is sort of the nirvana of Suptech in my view. And as you all know, some very exciting work coming out of the UK in that space. So that is a little bit about the breadth of the work that we're doing, and we'll get into some of the detail later.
Excellent. Thank you very much, Rafael, for these introductory remarks. Oliver, same question for you. Could you please share with us a little bit about your background and about the Suptech projects that you are currently working on?
Thank you, Adam. Also, many thanks for the invitation. Glad to speak to you today, and I'm looking forward to an intense discussion. So my background is I'm a former investment banker, having started more than 20 years ago in the industry, but then also during the financial crisis, I switched side and became a supervisor myself. So I was head of strategy of the Swiss FINMA, and that was in 2008, where technology became more and more important. We didn't call it Suptech at that time, but we obviously made great investments to get more and more structured data from banks. You might know that at that time, the discussion on stress testing was very high. And that was one of our first segues into the supervisory technology sphere. When I look what we are doing today for our clients, but also in product development, I think it's essentially two pillars. The first thing is anything Suptech related that relies on getting more and more frequent and more granular data from banks, especially in the finance and risk sphere, including on assets, on asset developments, non-performing loans, whatever. We see that there is a huge potential for the supervisor to get to better analytics and also better judgment and better decisions if there is a more granular view and more real-time view of what the banks are doing. And the second pillar that we are working on is that we try to, through tooling and to strategies, also increase supervisory efficiency, for instance, when it comes to the question of analyzing a lot of the reporting, or also qualitative reporting that banks or supervised entities are sending to the supervisor, like, for instance, audit reports, policies, and so on. And here in the area of natural language processing, we try to make supervisors more effective in dealing with this huge material of information, but also to draw peer comparisons and so on. So having a more comprehensive analysis across the supervised landscape using technology.
Excellent. Thank you very much, Oliver. Oliver, elaborating on what you just described, what would you argue are the key components of a successful Suptech strategy?
Yeah, this is a very good question. And the question is insofar very important as supervisors have clear statutory mandates. So they are supposed to protect depositors, they are supposed to protect financial stability or investors, etc., etc. So whatever supervisors are doing needs to be essentially supporting the statutory objectives that they have. And at the same time, supervisors are, as we all know, resource constrained. They are resource constrained in terms of staff, which means that technology has a great potential to have supervisors do things more comprehensively, but they're also constrained in terms of resources. So the investment envelope that they have to acquire or to develop technological tools is limited. So I think one of the most important things here is to have really clear and concrete use cases in all Suptech projects that not only justify investments, but also that allow the supervisor to have very tangible results very quickly. What do we achieve with that? First of all, the tangible results help the supervisor to solve problems that are on the plate right now, but also with these tangible results, it is essentially a proof of concept always that supervisory technology is something that really helps. And it also is something that then unlocks more investment cases and more justification to spend on supervisory technology. And that is kind of the opposite strategy of, say, coming with very abstract things like terms like big data or natural language processing or AI and so on. That is, of course, underlying technology and underlying methodology, but it's very difficult to have huge upfront investments in basics without providing, at least in the short term, at least some benefit to that. So I think a Suptech strategy, which of course works on the foundations, but at the same time does not leave out of sight that the mandate needs to be pursued and the mandate needs to be fulfilled, and every spend needs to be rooted in the mandate very concretely. That's an important pillar.
Thank you very much, Oliver, for these insightful comments. Rafael, would you add anything to Oliver's points about the foundations and key components of the Suptech strategy?
Yeah, I mean, I think Oliver has a spot on. And I particularly appreciate the comment he made around resource constraints and supervisors. And as as a corollary to that, it's worth reminding ourselves, I think, of the problem we're trying to solve, because in some regions, like in Europe, there are, by some estimates, 500,000 reporting rules and data elements that need to be reported by FIs, by financial institutions. And this number is growing literally all the time. So you have some GSIBs with teams of hundreds of people collating and disseminating reports, with the overhead that then requires. And then on the supervisory side, you have supervisors themselves and charged with making sense of all of this information, taking on an ever more complex risk taxonomy, and doing this, needing to do this in the public interest, right? So for me, you have ever more complexity, you have faster change, and you've got resource constraints. So one of the main design principles for Suptech for me has to be agility and scalability. So, Suptech strategy needs to consider automating the processing of the most well understood risks, like credit, for example, pretty well understood risk. And it needs to then, the second thing it needs to do is to simplify the how you interrogate and model and analyze less well understood risks, like non-financial risks, and particularly tail risks. So this combination of automation and simplification of the modeling, I think, gives you the agility and the scalability that you need to create space to deal with more complexity. And then I'm also a big believer in starting small and scaling up as part of your strategy. So at BaFin, we had this incredible credit supervision prototype. It's really kind of a magical tool, but we could only achieve it by starting with specific use cases and data sets, in this case, and a credit, and trialing that over time. And and associated to that, I think the other key success factors for strategy is kind of realism and courage. The people who are sponsoring this work are often, let's say, visionaries that are pushing through, what one of my colleagues calls the permafrost, and difficult, legacy systems, legacy ways of working, maybe culture in some cases, and obviously, as a kind of consultant and advisor, part of the coaching that we do with clients is about picking your battles, being realistic, and I do think that kind of personal commitment is a key strategic enabler as well at the individual level, whoever is driving this change.
Thank you very much, Rafael, and I completely agree with your comments. Now, moving on, both Oliver and yourself have already touched upon it in your remarks, but I think it's fair to say that a successfully implemented Suptech framework needs to be able to deliver on a fairly complex workflow, covering various areas stretching from data collection through to data management, data analytics, communication of the data, and so on, that of course all need to be properly addressed and coordinated. Rafael, drawing on your experience, what would you argue are the key steps that the central banks and financial authorities should take to ensure that all of these different components of the Suptech workflow are properly coordinated and properly addressed?
Well, I suppose it may sound a little bit obvious, but if you want to kind of coordinate the workflow, the first thing is you need to actually have a workflow. And, not wishing to be glib, but we worked with a European supervisor who walked us through the flow, and this involved logging into over 20 systems and supervisors walking to each other's desks with papers and so forth, because it was easier than some alternatives. And so then in times of stress, when data volumes spike or liquidity swings, etc., the system couldn't cope. So what we did there was we put in an actual workflow tool, which basically lived alongside, the data and the analytics, effectively a wrapper over the data analytics to orchestrate all of the tasks. And I think a supervisory workflow needs to do, at least 3 things really well. The first one is around interface with financial institutions. So, if there are issues with the data or, particular queries, this has to be easy to resolve via your workflow tool. And that includes, by the way, being user-friendly and having a good user experience. I think the second thing is around case management. So if a supervisor needs additional support from, let's say, an economist or an examinations officer, or even sometimes someone more operational, this interaction can be managed and logged via the tool. And then thirdly, an audit trail, right, for supervisory decisions, because more and more supervisors have more interfaces cross-border, and they have a wider number of agencies, and this audit trail helps you effectively keep compliant and organized and able to deal with volume and so forth. I guess the other thing to coordinate workflow is being able to do kind of ad hoc analytics and modeling quite quickly and easily. And so I could give an example from the UK where, as many of you may know, there were a number of system outage issues, ATMs going down and so forth. And this never threatened the financial stability as such, but it's something supervisors took a lot of interest in, considering it might be a lead indicator for a potentially larger event, and it's triggered a lot of the thinking around operational resilience, which now is in place. And so there was a question around under what conditions could low resilience threaten the functioning of the financial system, and then there was a potentially very rich data set from including the 500,000 data elements that I mentioned before, and this supervisor quickly created a number of scenarios designed to kind of help them ask better questions of FIs, right? And determine what aspects were already well covered by policy, which weren't. And so, supervisors were better armed with the info they needed. they could prioritize their work more effectively. It's just an example of how do you get these ad hoc queries done effectively so that your workflow is more or less stable. So those two things, I think, those two characteristics, I think, are of a big help, a lot of value.
Thank you very much, Rafael. Oliver, same question for you. Based on your experience, what are the key steps that the central bankers in our audience can and should take to ensure that all of the different components of the Suptech workflow are properly addressed and coordinated?
Yeah, so let me talk about two specific areas here. The first one is data collection, but then also the workflow that relates to the actual use of the data. And we talk about data collection. I think what we need to have in mind is that a central bank or a supervisor, they are dealing with a lot of institutions under supervisory purview or members of the economy, and they are requesting a lot of data. And this data is often available at the institution that they ask the data from. However, there is a big difference in the structure of the data. So we might have things that are well defined, like for instance, the ECB has a FinRep and CoRep framework that talks about say balance sheet and capital data, but it only has a limited granularity. If you want to go further down, for instance, loan by loan information or information on the treasury book or the trading book and so on, this is available at the banks, but the format will diverge massively. So one of the big questions here is how can we arrive at a common standard for collecting certain data, that it is not on the central bank to try to make sense of very different submissions, because it would essentially overburden them. So before we start collecting a lot of data, we might actually step by step need to agree with the banks and other financial market participants on how certain things should be reported, especially when we talk about more granular things. And given that there is that the complexity is very high, and given that also there might need to be investment necessary both at the central bank but also at the bank, we really need to go step by step, which then goes back to the question on how do we prioritize our Suptech strategy, and what do we need to do first, and where do we perhaps give ourselves a bit more time. So here really it is a collaborative approach that we need to pursue with the banks, because otherwise data quality will be lacking, data coverage will be lacking, and in Suptech it is as in modeling, rubbish in, rubbish out. So taking adequate attention of this issue is very important. The second thing that I would like to talk about is the question on how to use the data. And I mean, I'm a PhD macroeconomist, and I understand my co-panelist is as well. So we know how to do data work. And data work is usually done that you get data and then you start playing around with it. There are things, certain hypotheses that you might have that you want to test with the data, things that you thought you get out of the data are not going to work. Then while you're playing around with the data, you stumble upon statements or conclusions that you wouldn't have thought about. So it's very much an explorative approach. And this requires that the people that work with the data have access to the raw data pools. First of all, have also a domain knowledge, so that they can really use the domain knowledge of financial markets, economics, and their objectives or questions that they want to use to really think about how this can be best answered with the data. But it also requires a very streamlined process that they can really play themselves. In a lot of central banks and supervisors, we used to have, it's gradually improving and also depends a bit on the institution, a very siloed or process-driven approach, where you as an analyst, as the economist, you ask questions. You don't have data access yourself. You need to go to somebody who has data access. You need to formulate the question. You get a report, you try analyzing it, you see it doesn't work, or I need more. Then you need to go back, and it goes back and forth and back and forth, and it essentially impedes the process. And so really, it is important that those people that do the analytics are very close, or not, or even the same people that also have the data science knowledge and the access. So the reason that I'm emphasizing this particularly is that if you look at recent Suptech initiatives of central banks and supervisors, there is a certain tendency to have a special department that is called the data scientists or something like that. And I'm not sure whether this is particularly helpful. Of course, it is helpful also if we consider resource effectiveness and that data scientists are in very high demand. But we need to make sure that we don't create a satellite that is only approachable through complicated processes, which has resource constraints themselves. So we really need to make sure that we put the power of data science into the hand of the entire organization, and not only in a particular department. This particular department could help with methodological developments, like maintaining and expanding the underlying platform, making know-how available that perhaps is not that much available in the organization itself, but they should be more a kind of a support department as opposed to be somebody who is always in the flow. And I think what simplifies this or helps achieving that is that if you look at economists that are leaving university right now, you see that, or generally master of economics or data scientists and so on, there is a lot of, say, data science knowledge already with the younger staff that perhaps the more tenured staff hasn't available. But there's really data science and modern methodologies become more and more standard repertoire of people that typical central bank would hire, and we should not kind of put up structures that shield these people from the tools that they could employ for discharging their responsibilities.
Great. Thank you very much, Oliver, and I completely agree with your comments. Gentlemen, one other area that I would like to touch upon as a part of our discussion is the combining or balancing of the buy and build approaches, as when it comes to implementing Suptech solutions, central banks and financial authorities have the option to either buy the off-the-shelf products or build custom in-house solutions. Based on your experience, how can central bankers in our audience balance these buy and build and buy approaches to ensure that they are getting the most effective and cost-efficient Suptech solutions? Maybe Rafael first.
So look, as a general rule, I increasingly think that it's worth letting people who build systems for a living build your system. So, you know, F&A employees wake up thinking about analytics, great. But it's also true there aren't that many Suptech platforms out there, and so some supervisors may need to build in-house for some use cases, right? I think as a supervisor, if you have mapped out your value chain, right, from licensing to reporting, examinations, enforcement, etc., whatever your model is, then you will know what tools already work pretty well, and maybe you can keep those tools. When you go to market for the tools, there are a number of trade-offs. So in a recent project, we devised a framework that essentially plotted on one axis how many use cases each vendor could service. So by use cases, I'm talking about things like licensing, stress testing, different sorts of analyses, etc. And so, how much of that scope could each vendor tackle? And then on the other axis, we plotted how much customizability these systems required, and the less customizability, the better. And so, plotting kind of scope against customizability got us around 20 odd vendors. And then we considered a number of different other buying considerations. So will we go for the smallest number of vendors, which is important to increase resilience and reduce long-term cost, or we go for the most off-the-shelf, or will we go for best-in-class? And in the end, the shortlist was well over 1 dozen considered best-in-class for several use cases. This will vary significantly, obviously, across institutions and how they divide up the world. I would say that generally speaking, the core components are something around obviously the data platform to collect data from LFIs, collect data from the markets, internal data and other authority sources, etc. I think there's something around how do you store the data, including unstructured data, validation, quality assurance of the data integration, and then various analytics use cases. And then, of course, the visualization and the interaction, things like the workflow that I was describing earlier. So it is important to, as I believe Oliver referenced earlier as well, to have an orderly view of what are the use cases you're trying to tackle. And then, you can overlay a number of the vendors and then use these different criteria to make a buying decision. And in the example that I just gave, the client is keeping some of their in-house tools, and then there will be the integration work to do. So there's no one-size-fits-all solution, but I do think there is a benefit in keeping the number of solutions, vendor solutions, low to help with stability and maintenance and upkeep and all of those things.
Great. Thank you very much, Rafael, for these insights. Oliver, would you add any points to Rafael's comments about the balancing of the build and buy approaches?
Yeah, so perhaps to supplement what Rafael said and fully agree with everything that he highlighted. I think what is, if we look at the overall landscape, I clearly think that everything that is related to platforms, data science platforms, for instance, workflow solutions for data acquisition and so on, that should actually be bought. There is no point for a supervisor to develop their own, interface platforms that allow for banks to provide data and for the supervisor to ingest. This is actually not only it's not even Suptech, it's more kind of really generic data platforms and interfaces where very capable solutions exist both on premises but also cloud solutions, and that is certainly something that a supervisor or a central bank should not build themselves. I would also think that there are platforms or use cases which are to a certain extent standardized across jurisdictions, and where the software has a lot of domain knowledge embedded. One of examples is, for instance, platforms that help with transaction monitoring in financial crime, where it is about identifying networks of transactions, of clients, of beneficial owners, and so on. So this there are a lot of, also AI and ML measures are to be deployed today, for instance, in transaction monitoring. And this is something I wouldn't call it commoditized, because it's really very, very, very complex stuff. But there's also no point of, a supervisor or even a country to develop their own solutions in that regard. However, obviously, when we come to the question of how to ingest transaction reports, there might be some bespoke development on top of it to really integrate it into the local landscape. So this is something where really domain knowledge of specialized firms is helpful, where developing an own solution for a particular supervisor or a particular country doesn't really make that much sense. So really there is something to leverage. However, where I think bespoke solutions are more important is when we talk about analytics that are related to specific questions that need to be answered in a very agile way. So if you have a platform that doesn't allow for that, and that if you then always need to go to some kind of third-party provider, need to write a specification, need to perhaps do a tender, then this would massively hold back progress. So we should make sure that, especially when it comes to financial risks, that we still have a platform that is open enough for people to not only formulate their own requirements, but also to ask specific analytical questions without going to a third party, and also produce visualizations and so on. So these things need to be highly customizable, and they need to be very open, because at the time you procure something, you don't actually know what concrete questions you are going to ask in a year's time. And they're really need to have also the lower the barrier to access to these solutions. So there it's important that the solutions are open enough that solutions can, or that programs or analytical methodologies can be built on top.
Thank you very much, Oliver, for these insights. Gentlemen, I see that we received loads of questions from our listeners, and we'll be shortly moving to the Q&A part of the session. But before we do that, I would like to ask one further question myself. We have a tradition in the Suptech Broadcast that we, of course, want to share knowledge with our listeners and also provide them with some concrete examples they can take inspiration from in the context of their day-to-day work. And in this regard, I would like to ask Rafael and Oliver, are there any examples of Suptech success stories that you would like to share with us and that you believe are worth following on the side of our listeners? Maybe Rafael first.
Sure, I like that tradition. Well, I always go back to this idea that the world will never be as simple as it is today, right? Risks, data, institutions are getting more complex all the time. And Oliver just made the point about having very agile data analytics. And I think that's very important to have that agility, as I had mentioned earlier when I was talking about the Suptech strategy. And there is an example of that during COVID. Hopefully it's an example won't need to be repeated too soon in the future. But we worked with a supervisor who very effectively built models that effectively matched postcodes, so zip codes, where the virus was spreading, to portfolios of financial institutions. So basically asking, are this bank's borrowers likely to be infected? So they could directly map whether the virus was infecting the credit portfolio. And they didn't do this by putting out a tender for COVID modeling solutions, which didn't exist, they probably do now. But they used kind of low-code analytics platforms, spun up some algorithms. They tested them, must be said, they tested them with some FIs themselves, who volunteered data. I think there was, a feeling that this was in mutual interest, and then they deployed them. And, I thought that was very inspiring as an example of agile Suptech in action.
Excellent. Thank you very much, Rafael. That's indeed a very, very interesting case study. Oliver, anything you would like to add, or any example you would like to highlight for us?
So back to the first question that you asked me on use cases, I think one of the nicest example that we have recently in one country is that they employed a Suptech approach to mortgages. So as you know, in most of our banking systems, mortgages is one of the biggest positions on the balance sheet of banks. So and mortgages are, from one perspective, they are very standardized, but at the same time, if you look at, say, the collateral situation, the borrower situation, and so on, they also very, and they react very sensitively to change in the macroeconomic environment, the collateral values, borrower income capacity, interest rates, and so on. So if you look at the typical supervisory reporting, you see something like a reporting structured by LTV, loan to value, so that you see the security situation. But in the current environment, it's also interesting to see how would actually your mortgage book react if interest rates increased, or if you want to know that, you want to know how much repayment capacity does the borrower actually have. So you need to have the income situation and so on. If you have all this information, then you can do very, very effective stress tests that cover a large chunk of the bank balance sheet. And we had one success story where the central bank put out a very granular and actually regular survey where banks had to report their mortgage exposures, including borrower characteristics, and which then helped the central bank to do on a frequent basis quite detailed stress tests. And if we look back some years ago, this wouldn't have been possible. So we are talking about millions of exposures. We would, which was a few years ago still a data problem, right? So, or a scaling problem. Then also a few years ago, the banks wouldn't have much of the information of a credit file, not electronically. So it would be somewhere on paper. It would not be regularly updated. So the fact that the banks have this data right now readily available enabled that Suptech approach in the first place. And that is also another interesting aspect that we should talk about in Suptech strategy. We are not only doing this for the supervisor, but if a bank has good data, it also helps bank management. And the other way around, if a bank tells you, we don't have this, and we can't deliver it to you, then you should actually, as a supervisor, ask, so now how are you actually running your bank if you don't have this information? So isn't there a point increasing data coverage, data scope, data quality, not only from the perspective of us as supervisors asking for it, but us as supervisors telling, look, this is state of the art for your own bank management, and we are kind of taking the collateral benefit of it. And that also makes it much easier to justify certain investment that the industry needs to do in order to enable supervisory technology.
Excellent. Thank you very much, Oliver. And again, I completely agree with your comments. So, gentlemen, this brings us to the end of the first part of today's session, and we are going to spend the next 17 or 18 minutes on the questions from the delegates that we received plenty of. So I had a look, and where several questions touch upon similar topics, I will try to condense them into a single question to cover as much as possible over the course of the coming minutes. A number of questions that we received either through the Q&A box or that I received through the private messages touches upon the risks associated with Suptech innovations, like what are the risks associated with Suptech innovation, and maybe what can central bankers do to successfully tackle these risks. So maybe, Oliver, let me start with you now. What do you see as some of the key risks associated with Suptech innovation, and based on your experience, what steps can and should be taken to successfully mitigate these risks?
Yeah, so this is a great question. And again, let me refer to two areas in answering it. So the first risk is that we become blind because of data. So we get a lot of data. We try to leverage this information with the tools that we have developed, are going to develop. But actually, a lot of, say, risks might come in areas or in structures that we didn't have in mind. So let us make an example here. Think of the UK's mess in the pension sector just last October, where a structure that was actually reported, which also was on an isolated basis, quite well understood, caused a systemic issue that nobody really thought about. So I think one of the risks that we need to avoid is that we rely too much on supervisory technology and stop really connecting the dots. And one of the things that we need to avoid here is that we become too process-driven in supervision. So I remember there was one head of a supervisory agency that told, and I quote, "We should become from a knowledge-driven organization toward a process-driven organization." And technology is always in favor of processes, and we must not ignore the knowledge part. The second area I would like to touch upon is the more we see, perhaps even on a real-time basis, the more could be the risk that the banks actually put the responsibility on us. In the end, if there is a mess in a portfolio or a systemic market issue, that the banks tell us, "Look, we have given you all the data. Why haven't you seen it?" So you have a move from responsibility from the bank management to the supervisor. And I think there is two mitigants. The first mitigant is that we really at all times make clear that is actually the industry or the firms that have the primary responsibility for running their shop. But at the same time, we should also take a step back and actually ask ourselves what kind of data we really need to discharge our mandate and really make use of, given technological resource and whatever constraints, and where do we stick to aggregate information and really do a bit more of an outcome-based supervision. So this idea of getting everything at all times might not be effective, because first, we are not able to analyze everything at all times. And second, the more we have, the more is the expectation that we actually do so. So here we need to moderate ourselves a bit.
Excellent. Thank you very much, Oliver, for this response. Rafael, anything to add?
Yeah, I would add something different. Completely agree with what Oliver said. I think I have also another perspective, another angle on the challenge, which is around not so much around the challenges when you get there, but the challenges of getting there. And I think one of the key challenges is bringing industry on the journey. And I saw that in the Q&A there was a question on this as well. So there are many risks involved. I mean, some of them are generic, like the risk that the solution doesn't work well, can't scale, is not well designed. And then there are execution risks around managing all of the breadth of work that needs to get done. But the risk of, let's say, some blowback from financial institutions is also material. And of course, many supervisors have the authority to influence law, and they can mandate adoption of Suptech data models and APIs and all of that good stuff. But success isn't really measured internationally by whether the law exists. It's measured by whether financial institutions are compliant, right, or whether the system is actually working. So I do think it's important for supervisors to take efforts to mitigate what you might call a market failure in this space. Obviously, explaining the overall objective and the solution. I think it's important to leverage the current state. So, for example, if you were building Suptech in a given country where you observe that most of the large banks in that country already comply with CoRep and FinRep data standards, maybe in that scenario, setting CoRep and FinRep as the data standards as a stepping stone to where even if your vision is something a bit more granular. I often refer to the BIS maturity framework for Suptech. So even if you are thinking that you want to go to kind of fourth generation Suptech, there could be a stepping stone that's much more relevant locally. So that's the first thing. I think then sharing the business case with industry. So I've mentioned a couple of times the 400,000 or 500,000 data elements that are reporting. So if the growth of these data elements is, and I'm making this up, 15% a year, where will that leave FIs in terms of cost burden in 5 years' time, right? What is the compound cost increase? And ask FIs to define that business case against that background and use that to inform the conversation. I also think it's important to engage FIs around whether there are competing priorities in their existing commitments to the supervisor. So, if the supervisor has mandated the entire front office and compliance departments to kind of fix KYC and data privacy and customer protection, you may need a slightly more phased approach to the regulatory reporting and data strategy that comes with that. So I think that engagement of to use that phrase, bringing banks and other participants on the journey with you is very important in taking that consultative approach with a clear objective of where you want to go, but also being responsive in terms of the engagement.
Right. Thank you very much, Rafael. And I completely agree with your comments. Another set of questions, gentlemen, that our listeners seem to be interested in is the new types of data that they can either collect through Suptech or they can integrate to the analysis through Suptech, especially from the perspective of the real-time analysis or various types of predictive analysis. So maybe, Rafael, now I will start with you. What do you see as some of the key opportunities from the perspective of new data that is being collected or various data being combined, either in the context of near real-time analysis or predictive analysis, where Suptech offers new opportunities to the central bankers and financial authorities?
Well, I think maybe it's interesting to think about what are some of the non-FI data that can be pulled into a supervisory context. So, increasingly the climate risk space is very data rich. There are a number of frameworks and data providers that are able to guide some of that selection, some of that modeling. There's obviously a number of transition risks, physical risks, and so forth associated with climate change and with the wider ESG agenda, which I think is a very exciting space to consider. Now, I would say that most supervisors see this as a sort of a nice to have. But in terms of an area where there is potentially great potential for different supervisors to collaborate on projects, innovation projects, research projects that are sure to bear fruit in future, if done correctly. So I mean, it's a kind of a no regret topic to engage in. Obviously, you can do it well or you can do it less well. I think that is an area of data collection and analysis that is very interesting to investigate.
Great, thank you very much, Rafael. Oliver, similar question for you. What do you see as some of the key opportunities, especially in relation to the new types of data and their integration into the analysis that Suptech offers?
Yeah, so this is, again, an important point. And I think one of the aspects where especially central banks might want to have a specific look at is the relation between bank financial intermediation and non-bank financial intermediation. So as you know, NBFI is one of the key risks that the Financial Stability Board is monitoring. It's now called NBFI. Before it was called shadow banking. And I mean, we have achieved a lot in terms of making the banking sector more stable. But at the same time, although there is monitoring going on in the non-bank financial industry, no matter whether they are regulated or not, some of these institutions are actually not regulated at all. They have become more important over the last 10 years, and there might be risks that we are not fully aware of. And one of the important risks is actually the link between the non-bank financial sector and the bank financial sector, because banks might be funding NBFIs and the other way around. And when it comes to the Suptech approach, for me, is always very important, not only to look at supervised institutions in isolation, but really try to identify the overall network. There was one initiative that I was involved in the Financial Stability Board, which was a so-called data gaps initiative, where it was about mapping counterparty relations between large systemic banks around the world, so that one could see if there's one collapsing, what kind of impact would this have on other banks in other countries. And so here, I think the aim could be that we expand this to not only cover banks, but also NBFIs, and that we also use it to have more frequent, more up-to-date, and perhaps, I don't want to call it real-time, but actually quite current data available, because market swings can be quite substantial, and having this data only on a monthly basis or quarterly or even yearly basis is not sufficient.
Excellent. Thank you very much, Oliver, for this response. We have approximately 5 or 6 minutes left, so maybe I'll just ask one final question based on the input from our delegates and participants. And I can see a number of delegates and participants asking about the sort of almost like internal buy-in associated with Suptech, of how the innovations or the Suptech teams can effectively communicate with the senior management within the institutions to ensure that they receive the right support, that everything is properly understood, and so on. Both of you gentlemen are, of course, working with many central banks in many different parts of the world, and with central banks on various stages of their Suptech journeys. again, based on your experiences, what tips would you provide to the Suptech specialists and Suptech team members who are currently listening to us from the perspective of the effective communication and engagements with the senior management at their institutions? Oliver, maybe you can go first.
Great, very simple answer. Tell them what kind of concrete problems you have to solve, what kind of risks you are trying to cover, and how this allows institutions to better fulfill their mandate. I agree, and it was also in the questions that I saw in the Q&A, that just talking about abstract things like big data or machine learning, I think some of the seniors are excited by that, but a lot of them are not, especially as there are resource conflicts and constraints. So make clear what you're really going to achieve and what you are going to do better than today. And that technology is the right way of solving it. And then people will very quickly see how this relates to the overall strategy of the institution, how this relates to the mandate, how this relates also to the accountability that central banks and supervisors have toward the public and the political sphere, and that is the way to address this. And also, of course, I'm always very say cautious, saying we are going to save money with that in the long run, because most likely we won't. There might be new things coming up that compensate for this, but yeah, being able to say we are going to be more effective and more efficient with that is always also an important argument.
Excellent. Thank you very much, Olivier. Rafael, any thoughts on your end to conclude our discussion?
Well, I guess I would just add that sharing knowledge is always a great thing, and I sympathize with the person who asked that question. I think the more that you can identify interesting case studies, interesting videos online, perhaps, or if they're not readers, papers, or invite them to events like this. It's a good opportunity to build that relationship, to slowly build awareness within the organization of the type of solutions that exist, and ultimately, position yourself as someone who understands the topic and is there and is ready to innovate and is ready to disrupt. But it does take time in many organizations.
Excellent. Thank you very much, Rafael, for this final comment, and I completely agree with everything that you said. I'm now looking at my watch, and we are pretty much at the end of today's session. So I would like to take this opportunity to thank you, Rafael and Oliver, for finding the time to join us. You have provided us with some excellent and very interesting insights that I think led to a fantastic discussion. So thank you very much, Rafael and Oliver. It was a real pleasure to have you here, and I'm sure I'm also speaking on behalf of our participants that we all very much look forward to keeping in touch.
Thank you so much.
Excellent. Thank you very much. Also, I would like to say a big thank you to you, ladies and gentlemen, for your time, for your attention, and for a very insightful discussion. We received plenty of questions today, which is always excellent. So that's very much appreciated. We'll definitely make sure to share the materials that Rafael and Oliver recommended. I see that some of you also emphasize that you would like to continue discussions with Oliver and Rafael, and that you are interested in learning more about the solutions that their companies Accenture and Oliver Wyman offer. And you can see on the slide and also in the chat feature on Zoom the contact details of both Rafael and Oliver. So I'm sure they would be delighted to continue the discussion. Also on this slide, ladies and gentlemen, before we conclude this session, I would also like to draw your attention to the upcoming episodes of the FNA broadcast series, which the next episode will be on the 20th of April, where we'll be having again some excellent speakers from the International Monetary Fund and Security Alliance, and then on the 25th of April we'll be having another very interesting discussion with the Hong Kong Monetary Authority. With this being said, ladies and gentlemen, thank you very much again for your time. I hope you all stay safe, and we'll definitely look forward to reconnecting soon again. Bye-bye, and I hope you all have a very good day.